about the fundamentals of market from here on, we have Sumit Poddar from Tikona Capital joining us to talk to us about just that. Sumit, hi, good afternoon. Good to be speaking with you. Let's begin by discussing the market setup itself, right? In January itself, there were a lot of people who were saying that probably we have made the highs of this year. There are no fresh triggers available. Elections is something which is priced in. Budget was nothing to write home about. And earnings will now be on a downward trajectory, if at all, because the growth rate of earnings will actually come down a bit. In this context, what is a realistic return expectation that one should have from the Indian markets this year?
Yeah, hi, good afternoon, and thanks for inviting me on your show. Thanks a lot, as such. And you brought a very intriguing point. No doubt, markets have been showing newer highs, and which is what is creating fear of heights in the minds of investors. I think 2023 was definitely a very good year, and post that, we are seeing initial part of 24 driven largely by the positivity as well as the flows. I think we need to kind of sit back and maybe observe what exactly is happening. Yes, earnings are quite strong. If we look at Q3, the demand maybe is relatively on a slower trajectory, but at the same time, the profitability is kind of moving up. Also, what is happening here is two, three factors. First, of course, the market, Indian market itself is literally becoming broad based. There are several engines. At some point, some engines really are taking front foot, whereas some engines are taking a back foot. I mean, look at the Q3 results itself. If the top line was not really that healthy, we saw some of the sectors literally disappointing, but at the same time, some of the sectors took the leadership as far as maybe metals, oil and gas literally showed very good results. Banking uh, as well as auto helped a bit, but at the same time, there were mixed outlook as far as the future is concerned. Nonetheless, given the strong flows that we have of almost 17,000 to maybe now almost touching 20,000 crores of SIP, which is what is helping the markets, and which is why we are not seeing, despite maybe the concerns, despite the fear of heights, we are not seeing that kind of correction that should or that may take place. In such a scenario, of course, it's always good to stay invested, but at the same time, be watchful. And having said that, we are not in a bubble zone. While the valuations may be higher than what they have been in the past, but we are definitely not in the bubble zone. That's what I would rather say.
So definitely not in a bubble, though the meteoric highs is definitely giving vertigo to a lot of investors. But Sumit, I was just going
True.
through your portfolio allocation and seems like you're still a lot more tilted towards small cap. Again, there is a part of the street which is worried about the froth there. A lot of funds have actually stopped taking in money for the small cap funds as well. Where within small caps are you finding value right now?
So I think we are rather than looking at the size of the company, we are looking at the opportunity that these companies are offering. We are not necessarily buying it because it is either a small cap or a mid cap. So across sectors, I'm sure you have gone through our fact sheet where we are quite diversified as far as the sectors are concerned. So I mean, let's take BFSI itself. Despite the kind of numbers that they are delivering, despite the technology literally helping them. Yes, even within the sector, we are finding banking and NBFCs, smaller NBFCs are literally helping the portfolio, which may incidentally be happening to a small cap. So they are growing quite well. Take the example of mass financials, which have been kind of on every quarter they are growing quite well. Similarly, take the case of Fusion. I mean, they while they may happen to be small cap, but they are literally growing quite healthily in terms of the overall macroeconomic growth that is happening, as well as the managements themselves taking an extra effort to grow faster than the industry. Take the case of maybe auto anks. Again, there are opportunities, rather it be in terms of electrification or batteries, or for that matter, the global manufacturing side. So incidentally, they happen to be small caps, but at the same time, they are growing quite well. and which is what is helping our portfolio, or maybe helping to outperform the broad-based benchmark, and helping our clients to uh, get the returns which are much higher than a normal benchmark, or uh, kind of a returns that can uh, be just taken by the ETFs as such. So
So,
that's where the opportunity is coming in from.
sure, point taken. Specifically about the paint sector, Sumit, what's your view? Because with this entry of Grasim, the incumbents' market share is under threat, at least. That's what analysts believe.
Well, I mean, that has been the discussion since last almost 3-4 years. And yes, entry of a new competitor in a very lucrative sector like paints, where return on capital employed is quite healthy, especially looking at the numbers of Asian paints. Yes, opportunity from an outside perspective definitely uh, looks attractive to a person investing in that particular sector. But it's not just about entering the sector. It is also about on the ground level whether they are able to uh, take up on the distribution side and things like that, which is what is going to matter much more than just the competition. Having said that, it is not just about paint per se, it is also about the opportunity that is existing. Maybe that will make the incumbents much more stronger to compete against the newer player. Yes, it's a long battle. I may not really say that it is going to impact something very immediately, but over a period, maybe everyone could thrive in that particular sector.
Okay, point taken. On that note, Sumit, we'll let you go. Thanks so much for making time and speaking with us and discussing your views on the markets right now.